What a tremendous day we had in the U.S. stock market. The S&P 500 was up about 1.45%. And the nice thing about it is it was broad-based advance with 89% of the stocks in the S&P 500 closing in the green. Not only that, but we were led higher by many of those magnificent seven companies out there. Tesla, as just one example, was up 7% today, the second best performer in the entire S&P 500. Tesla might have got a little bit of a boost out of some news we heard midday about Bitcoin and a courtroom decision between Grayscale and the SEC, and that kind of lit a fire under a lot of Bitcoin and cryptocurrency related assets. Of course, that's a nice risk-on type of a mindset that was already being led higher by the NASDAQ at that point, so that kind of just added fuel to the fire today. So we'll talk about all of that. We'll also talk about the fall in the US dollar today and how that helps support foreign assets along with commodities. Then we'll get into our trade application example where I wanted to focus on one of those magnificent seven companies and show you how to do a bull put spread. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 29th, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area. Make sure you're signed up for our email distribution list. That way you can be notified whenever we post these videos. You'll also find which stocks are giving you overbought and oversold cluster signals within the S&P 500 at the bottom of those emails. In addition to that, we're heavy users of X, formerly known as Twitter. If you're not doing so already, I would encourage you to follow me. My handle is @BrandonVanZ, and we really appreciate those of you that click like and repost over on that platform. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And let me get our heat map pulled up here to start the conversation. As you can see, it was a glorious day in the stock market. And like I just mentioned here a moment ago on X, it was actually back-to-back sessions that were quite glorious. Yesterday I posted the screenshot of the heat map of the S&P 500 and mentioned how it was like 83 or 84% of the market closed in the green yesterday. Which was a little surprising considering the market wasn't even up 1% yesterday. Today, we follow that up with 89% of the stocks closing in the green, but today was a much more expected end result under those set of circumstances, with the S&P 500 basically up 1.5%. So a really strong two-day rally here that kind of woke us up and broke us out of this funk. It kind of felt like death by a thousand paper cuts for much of August. But as we're heading into the Labor Day, holiday here in the United States, things are starting to perk up just a bit. So happy to see that. And the other nice thing about today's trading is that, as you can see in front of you, there were a lot of the mega cap tech oriented names that were the ones that were the leaders of this market, right? We want to see our leaders continuing to pull the market up with them, regardless of people complaining about that earlier this year. It's actually a good thing when you're looking at a market cap weighted index like the S&P 500 to have the backing of the most important players within that market. And today we certainly got that. You'll notice here that Tesla was up 7.69% here today. It was actually the second best performer in the entire S&P 500. And of course, it's part of our Magnificent Seven and really helped that kind of consumer discretionary or cyclical area there. We also saw that Amazon was up 1.33%. We'll actually be talking about that stock a little bit later. We saw that Apple was up 2.18%. There was some news on Apple today. They've got their one of their big product events on September 12th, I believe, if my memory serves me correctly. So that was announced today. Remember, they usually launch some new iPhone related products and things like that in September time period. So that's coming up here, and so there might be some buying and anticipation of that. We saw that Microsoft was up 1.46% today, of course still getting through their purchase of Activision Blizzard. We've got Nvidia up 4.16%. And I just saw a comment here on X/Twitter a moment ago that said that NVIDIA was at an all-time closing high. So it might not have hit all-time intraday highs, but on a closing price basis, there we are all of a sudden, right? Just last week, it felt like we were talking about how NVIDIA started to slip just a little bit. And it just takes one big day like this, up over 4%, to get us right back into the groove of things, as NVIDIA has been the superstar stock of 2023 in a lot of people's eyes. Google had a great day as well. They were up 2.8%, actually closed a bit off of their highs, but really strong session there. And they've been in a nice little catch-up mode here more recently. Remember, at the beginning of the year, Google was a bit of a laggard within the Magnificent Seven arena, but it seems like they've started to kind of start clicking a little bit more here within the last month or so on a relative basis compared to those other six in the Magnificent Seven. So anyway, Google/Alphabet rocking it here today. And then last but not least, we do have Meta/Facebook. It was up 2.66% today. So notice that all of our Magnificent Seven was up today, and all of them were up over 1%, with some of them up as much as 7% in the case of Tesla. So today was a big hoorah type of a day for the entire market, kind of being led by the most influential companies in the United States. Now, in addition to that, you don't have to look very far to look for other green shoots. It seemed like the entire market was a bit perky here today, but as we start looking at kind of areas with more consistent green, I guess you could probably say technology, especially the semiconductors, stood out. Semiconductors are an incredibly important industry these days in terms of market cap, and as we look at all of these here kind of in this yellow square that I'm kind of circling with my mouse, notice those returns listed in the white part of the box there, across the board 1% plus types of moves, anywhere from 1 to 4% moves there across the entire semiconductor industry within the S&P 500. Another area that I happened to notice was doing reasonably well today were some of the financials. In fact, if you look at the charts of Visa and MasterCard, they're really starting to kick into favor here again. Remember, it wasn't too long ago we were talking about the doldrums of PayPal, and even an overseas company called, I think it's Adyen, had really struggled here last week as well. But kind of the old standbys in the fintech space, Visa and MasterCard, they're starting to look like they're clicking into some nice trends here all of a sudden once again. But the banks caught my eye today as well. I was close to looking at a trade application example within the banks, because a number of them are setting up with bullish near-term divergences. I opted not to go that direction in the end, but some of you might take a peek at some of those banks, and you might find something you like there as well. So they perked up a little bit here today after kind of struggling here in the last 3 weeks. We saw a lot of the consumer discretionary stocks popping back. Just yesterday, we talked about Starbucks as a sold put opportunity in my options for long-term investors class. It was up 2% here today. We saw that Nike, remember last week when I was with you, I said, well, here's your runner-up idea as far as a sold put idea. I ultimately went with Kellogg, but I said a runner-up would have been Nike, as it had, I think it was like 10 or 11 days in a row to the downside and had some oversold clusters and things like that. Well, it snapped back really nicely here today, up 2%. So for those of you that might have sold puts on it last week, you're probably feeling a little bit better about that situation here. We saw a lot of the material stocks doing quite well here today as well. There's Albemarle was up a nice 4%. That's a stock that we've bought in the past dividend growth investing class and in the trend trading class, and is very connected to the lithium mining space, especially important for electric vehicles. So it was having a day in the sun here. It's kind of sputtered out here over the last year or so, but it had a tremendous move over the last 5 years. So it's kind of just catching a little bit of a breather. But today, back on track there with a pretty solid move. A lot of the steel companies did well. I know Steel Dynamics was one of the top 5 companies in the S&P 500 today, up over 4% there as well. In terms of areas that kind of sat out today's rally, not much in the way of that, right? You had a pretty consistent buying here today across the board. One area, or maybe a handful of areas that we could maybe talk about just briefly, the defense contractors were out of favor here today. We actually talked about one of these in my dividend growth investing class today, and talked about the notion of, you know, the aerospace and defense area not necessarily being as cyclical as the typical industrials company would be otherwise, because of course they have the U.S. government and its allies across the globe as their key clients, and therefore with the ability to print money effectively, they can sometimes have stronger years when the rest of the economy is out of favor, but sometimes it works the opposite as well. Sometimes they'll have a bad year when the rest of the economy is really humming. So they don't always work the same way as other industrials, and today was one of those days where that defense and contracting area was a bit out of favor. Staying within the industrial sector, I noticed that the railroads were also a bit out of favor today. Norfolk Southern was one of the worst performing railroads here today, but still not a disastrous result of just down 1.64%. But you can see that kind of bled over to CSX and Union Pacific there a little bit as well. And then I should probably mention the drug stocks. It was actually quite hit and miss. I'm personally pleased with how things shook out today. Now, part of the story there is probably you know, the strength in the overall market kind of helped float all boats, so to speak. But for those of you that didn't catch it, today was the day that that they made it official as far as which 10 drugs here in the United States would be subject to the new price negotiations with Medicare Part D. Remember, we heard about this many months ago, and it has been a challenging summer for a lot of the drug companies, especially a lot of the ones that I'm interested in as a dividend growth investor. Many of them have sat out this rally as this kind of overhang with this new kind of change in the rules here in the United States was kind of being batted about. Well, today it was official. We now know what 10 drugs they are, and they are from a lot of those companies that we probably expected it from, including Johnson & Johnson, including Eli Lilly, including Merck, including AbbVie, including Pfizer, including Bristol Myers, and so on and so forth. So anyway, if you're looking for that list, I did post it on Twitter/X earlier today, so feel free to check that out on my timeline. But considering that news broke today, I think maybe there was some fear as it hit in the pre-market session that today would be a down day for the drug stocks as a result. That really was not my impression as soon as I saw the news, and it's largely because to a degree, it's already been baked into the cake. Now, obviously, it's hard to evaluate this perfectly upon just one day's worth of information of these specific drugs that will be affected. But considering how much they have underperformed the market this year, of course, I'm not talking about Eli Lilly in this case. Eli Lilly has been one of the market's superstars. But all the other drug stocks, except for Eli Lilly that we just talked about here, that'll be affected by this news we heard this morning, they've really been underperformers for the most part. And so to a degree, it kind of feels like they took their lumps, it's been baked into the cake, and now that the known information is officially out there, now we can kind of move on, right? And it might dent their profits to some degree moving forward, but hopefully it's not going to take down their whole companies or different things like that. So today, a bit of mixed results there, as you can see. We had Pfizer down just a touch here today, but a lot of the other stocks, including Bristol Myers, had a nice day, up 2% in their case. So hit and miss there, but very important news that broke this morning within that specific industry that many of you will want to be aware of. All right, let's go ahead and pop on over here to the main part of the platform now and get a feel for the breadth numbers. I mentioned this already, but just to make it official so you can see it with your own eyes, 445 stocks out of the S&P 500 closed in the green today. That was good for an 89% hit rate. And remember, that followed yesterday where we were also above 80%. So back-to-back 80% plus days. Really strong breadth here all of a sudden as we push towards the end of the month. Let's take a look at our charts now. Remember, anytime we have a more than 1% move in the market, I like to start off with this chart 6D because I think it provides an interesting visual to help us all understand how volatile or how lack of volatile we've been here more recently. And in this case, it was a 1% plus move to the upside. So remember how you read this kind of indicator here in the middle is, there's these two blue lines that are horizontal lines, and they will kind of straddle the zero black line there in the middle. And so if the green bars are stretching up and over the blue horizontal line, like was the case today, that means it was a 1% plus price move to the upside. Of course, last week we had one of the rare days where we had a 1% move to the downside. But it's kind of been they've been trading blows, so to speak. It hasn't been runaway with just the bears completely dominating or the bulls completely dominating. If anything, what it feels to me like is that we've had a lot more calm activity here more recently, and you can kind of see that just by looking at the size of these bars over here towards the right, and then comparing them to the size of these bars exactly a year ago off to the left. We are talking about night and day difference here. This has been very calm trading for many months at this point. A year ago, we were going through very exaggerated volatile trading. And so you can see that naturally on a day when the market is up. And as you can see, this is our fourth out of the last 5 days to the upside, including 3 in a row. That we've had a little bit of a stabilization in the price action up above here. And you kind of look at this move here, and it doesn't necessarily look like the bulls are just going to roll over at this point. Obviously, from a seasonality perspective, we're in a little bit more challenging time of the year, but maybe because everybody's anticipating the bears coming back for their vengeance, maybe it's just not going to happen, right? The stock market likes to do its best to frustrate the most people at the most times possible. And so if everybody is widely expecting bearishness, then maybe the market will frustrate them and push the markets to the upside, which of course doesn't bother us long-term investors, but could have some issues with other people depending on how they have their portfolios established here at the moment. Remember, on days when the market is up, like we see here with the S&P 500 up 1.45%, that tends to be a time when the VIX falls, and that was the case here today. Remember, this purple line that you see down below here on this chart will basically represent the VIX, and so we ended right around 15 on the VIX. Remember, last week we were up at 17. So at that point I was telling you, while that feels like we had a push higher in fear, it really wasn't if you take it into the grand scheme of things and look at the pathway of the VIX over the past year, where a year ago we were talking about the VIX above 30. And so here we are today with the VIX slightly below 15, meaning that we are literally 50% or half as volatile or fearful in the market today as we were basically 11 months ago. So times do change very, very quickly, but no surprise with a big up day in the market today. Those that were trading the VIX sold it off. And remember, that's a good thing for people who have already sold options premiums and credits previously. And remember, that's what we did last week when I was telling you that I get excited on days when the market is down more than 1% to sell puts, because those are days when the VIX is higher and we're getting more juice when we're selling those credits. And just a few days later, like what we're looking at today, is a good reminder of why I think in those terms, because not everybody thinks that way, and that's okay, right? There's not a right or wrong when it comes to this conversation, but in general, if you can get into that habit of selling puts on businesses that you wouldn't mind owning for the long term and doing them on days when everybody else is fearful, you're going to get a slight boost to your premium and credit that you're receiving up front. And that way, if you have a big 1% up day just a few days later, like we do in this case, you're going to get that double benefit of having the delta of the underlying security probably helping you, because in all likelihood, if the market's up, the stock that you sold a put on is also up. But then you also get the double benefit of having the volatility or the vega helping your trade, as well as days when the stock market is up, volatility falls. And so if you're selling fear and you're benefiting when people are happy just a few days later, that usually works out to your advantage. So if those of you that have kind of watched my presentations over time and kind of gotten used to my routine of selling puts on days when the market is down 1%, this is a good reminder as to why I think in those terms. And it doesn't mean that we're going to win, the most recent trade or anything like that. I'll lose plenty of trades just like anybody else. But in general, that is my broad philosophy. All right, let's go ahead and take a look here at our traditional 4-grid now. And this will be chart 4B for those of you that are premium market scholars following along at home. And as you can see, the S&P 500 was up 1.45%, as I mentioned before. And today was a fairly important day for the market. As I mentioned, we were up 3 days in a row now, but today was quite the kind of blow-off move to the upside. Hopefully it doesn't mean that we're going to crash spectacularly tomorrow. But, just 4 days ago, it was looking a little bleak when we had this bearish engulfing candle, and we've now completely offset the bearishness of that particular move, right? As of yesterday's close, we did not quite breach the top of that candle from Thursday, but today we overpowered it. And not only did we overpower it and kind of just offset any of the expected negative effects of a bearish engulfing candle, but where we ended today was equally as important, at least in my eyes, because we are now back above that 30-day moving average. Notice the moving average color changed from red yesterday to yellow today. And what that means in this particular case is that price is above a falling moving average right now. But just giving it a quick visual look, that yellow line looks quite flat right now, which means that it's attempting to bend that line from going lower to going back higher again, like we saw back here when the moving average was green. And so if we get a couple of more bullish days here, it is possible that that moving average color will change back to green, and who knows, maybe that starts a new run into the end of the year, right? We have to be prepared for that possibility. So it's good to see that. Remember, one thing that was a little shocking when I did the video with you guys on Thursday was that we actually went back to a bullish posture that day. Now, I wasn't a big believer of it that day, so just to be fair, but it is true that that signal did exist, right? And it was a little surprising. I'm like, wow, that's so strange. We had this big sell-off day, but the market forecast posture went back to bullish. And that was because the green line went back above the 20 zone, or the lower reversal zone, however you want to say that, on the market forecast technical indicator. And sometimes that just gives you a heads up that you may be thinking one thing, but if there's technical indicators that you respect and find useful are telling you something else, maybe it's telling you that, hey, maybe your gut instinct in this case is not correct, and maybe you need to open your mind towards the possibility of some change that's afoot. So it makes you wonder if that took place here, because remember, that had happened on the S&P 500 on Thursday. It had actually happened on the NASDAQ Composite on Wednesday, and it did not change back to a bearish posture despite the really ugly selling that particular day on the NASDAQ. And here we are today talking about the NASDAQ up 1.74%, built on the backs of those Magnificent Seven stocks that I had mentioned just a moment ago. So I found that price action to be quite interesting in the last week as well. And all of a sudden, I'm more of a believer now that I see us back above the moving average. Doesn't mean that it has to continue to work that way. It just goes to show that it is trying to prove itself to me that it deserves to be considered bullish here at the moment. So we are back to weekly bullish postures on all four of these charts. You'll notice that with the Dow Jones off to the right-hand side here and the Russell 2000 down and to the right, both of those went back to weekly bullish postures today. The S&P 500 already did that on Thursday of last week, and the NASDAQ already did that on Wednesday of last week. But in addition to all of that new information there regarding posture changes to the bullish side of the equation, we also have two charts now trading back above their 30-day moving averages, the S&P 500 and the NASDAQ Composite. So that's a good sign there as well. You can see over here Dow Jones and Russell 2000 still have work to do in that regard. You can see we still have a little bit of an air pocket between where they're trading right now and where those moving averages are, and those moving averages do remain red. Notice that the tilt lower in the Russell 2000 is a little bit more aggressive than the Dow Jones Industrial Average. So it would be nice if we can get the Dow Jones at least to get up here and follow the S&P 500, because the Dow Jones could see its 30-day moving average switch back to green relatively quickly. As I look at this red line right here, it looks flattish to me. Yes, it's down just a hair, but it is not something that is overly difficult to overcome. It'll be a little bit more challenging for the Russell 2000 to pull that off because there's a more decided tilt lower in that moving average. But I think the Dow has a decent chance if we don't just see this, the bears reemerge here all of a sudden. The Dow is going to have a pretty decent chance to go back to a green moving average relatively quickly here. So let's keep our eye on that possibility as well. So the Dow was today's laggard. It was only up 0.85%, but remember that's traditionally the case whenever we have an aggressive up or down day. More times than not, the Dow is not the most extreme mover of that particular day. Sometimes it happens, but more times than not it's not, and it's because usually you've got your blue chip companies in there that don't move around nearly as aggressively as something like Tesla, right? Tesla's not in the Dow Jones Industrial Average, but it's definitely a big part of the S&P 500 and the NASDAQ. So anyway, let's keep our eye on that. But yeah, the Dow is a little bit of a laggard here today, still a promising day, and you can see that we did close basically at the high of the session for the Dow, and that goes for the other three indices as well. We were basically at the high, not quite by the to the penny, but close enough for what we are looking for in that regard. It basically gives you the sense that had the market stayed open later, we probably would have ended up continuing to trend higher as the afternoon progressed, and that kind of builds up a little bit of buying momentum as we head into the next day. Of course, things can change. I did notice, by the way, Hewlett-Packard reported their earnings after hours here tonight. That stock is down about 5% or something like that. So these days Hewlett-Packard is not all that important to the market. So I don't think that will be the only reason that the move we had today would be derailed. But if that's combined with some other news that we hear from overseas or what have you overnight, you just never know when things will stall out. But right now it's a very promising sign that we basically had pent up buying throughout the day, and those that were buying did not mind paying higher prices for that merchandise. That's usually a bullish feature for the market. So things we're certainly not in the clear. It's not like we're hitting new 52-week highs or anything like that in any of these indices, but does it feel a little bit better today than it did just last Thursday? You better believe it does. A back-to-back session like we just experienced from a breadth perspective will go a long ways to kind of help resolve some of your concerns. So we'll keep our eye on it. We're kind of stuck in the middle of no man's land right now, but we've had a very reasonable bounce here out of these markets, and it's giving that possibility of us, clicking right back into that uptrend that we've been in most of this year so far. So things are looking pretty promising there. Also wanted to show you here our 1040 crossover chart. This is chart 4C for those of you following along at home. The reason I wanted to bring that up here today is because you're going to see these little green arrows emerging underneath the weekly candles of all four of our charts here at this moment. Now I've got to be careful with this because remember, when we're looking at this particular chart, these are weekly candles, which means that any sort of indications that you're seeing on the chart based upon the current candle can change before now and Friday at the close, right? If we just sell off for the rest of the week, it kind of nullifies everything that we're looking at the moment. But I wanted to at least point it out because it was somewhat unique that at this moment here early in the week on a Tuesday, we do have those little green arrows showing up on all four of our charts. So it is kind of a sense that it is a pretty broad-based advance that we've been experiencing, and it's not a fluke. It's not like a glitch that one of them, like the Dow had, as a price-weighted index, had one really strong move out of United Healthcare or something random like that. This is actually showing us that across the great landscape of stocks that are out there here in the United States, we've had a very big push this week. What those little green arrows are telling us is that price is back above the orange line, which represents the 10-period exponential moving average. So remember, for those of you that are more used to daily charts, that would be the equivalent of a 50-day moving average. And many of you are aware that there's a lot of market followers out there that will track the 50-day moving average just like they'll track the 200-day moving average. And in recent weeks, all 4 of these charts had fallen below the 50-day moving average. But as of this moment in time, there's looking like a pretty decent chance that this week will resolve all of those particular concerns, as we'll be back above the 50-day moving averages. Remember, what I was showing you on the previous charts was the 30-day moving average. And we had the NASDAQ and the S&P 500 above the 30-day moving averages in both of those cases. But in this case, what I'm showing you is the 50-day moving average. We have all 4 of our major indices in the United States back above there. And so that can maybe be used as support to help kind of, push this market along more bullishly than we might have assumed just a week ago. So I think that's a pretty promising sign there, all else being equal as well. And you'll notice here, by the way, we do have golden crosses on all 4 of these charts at the moment. That's not anything new. That's been the case for several weeks, but it continues to be the case. And some of you might have been wondering, if you haven't looked at this chart lately, if the selling that we've had in the last 3 weeks has been enough to pull the 10-period moving average below the 40-period moving average, in this case the weeklies, and that still has not happened. So we've been able to endure the short-term selling in the first 3 weeks or so of August, but it has not pulled the 10-week moving average below the 40-week moving average yet. Maybe that's going to happen in September, but right now we're still good to go from that perspective. All right, let's go ahead and pop on over here to the internet. I always like to get a chance to say thank you to those of you that are willing to take the 5 seconds out of your day to support us. I know some people would rather, take a half an hour to complain about it or what have you, and I get it. Hey, it's not for everybody. It doesn't have to be. But if you want to support us, that's the easiest and best way for you to go about it, is to help us along there on social media. In particular, you'll find that David and I are the most active on X/Twitter. And as I always say, as long as we're up and over 100 likes, I'm more than happy to give you an hour's worth of my time. Remember, I didn't used to give you hour-long videos, but I want to reward those of you that are willing to click like, and I feel like 100 is at least a substantial enough amount of people that are supporting us to give you an extra effort on my end as well. So thank you to the 107 of you that clicked like for me last time around. Let's do some shout outs here. Thank you to Teddy, thank you to Sandeep, thank you to Brandon and Dragon Rider and John and Jeff and Ding and David and Elena and Leo, Lucius, Robert, Margie, John, DGI and Options, Nina. Let's see, we got Vernon, we've got Chris, we've got Catherine, we've got Doug, and there's Larry, and there's Jim, and Serene, and Neil, and Eugene, and Paul, and Surendhar, and Wayne, and Sonia, and Craig, and Valerie, and Tobias, and Ayakipa, and Larry, and Kirk, and William, and African Economist, and Dr. Bob, and Ray, and Arthur, and Nietzsche, and H. Patel, and Richie, and Kenneth, and Dave. The list goes on and on and on. I can't get to all of you, can't even get to half of you, but I do appreciate all 107 of you that are committed to taking 5 seconds out of your day to say thank you to both David and I when we put the extra effort into these videos here that you guys can all access for free on YouTube. All right, let's also have a little chat here about what's been going on with the sector selector. Remember that I do put this together for our premium members on Friday evenings, and so this is a couple of days stale by now. It's also helpful to remind yourself that this is based upon an equal weighted system, not a market cap weighted system, like we'll be talking about here a little bit later when we do our 12 grid analysis. So it's a slightly different approach there, but can give us some interesting insights and kind of give us an idea as far as any sector rotation that may or may not be taking place. We didn't really have a lot of change up at the top of the rankings this week. You'll notice that energy remained number 1 for the 4th straight week. Industrials remained number 2 for the for the 3rd straight week, and information tech remained number 3 for the 3rd straight week. So Rankings 1, 2, and 3 have not changed in the last 2 or 3 weeks. Where we did have something new was communication services. And this is partly due to what I had mentioned before about Google playing a little bit of catch up there. I've also noticed that a number of the cable related companies within the communication services area have really perked up here nicely lately. You know, one stock that we've focused a bit of effort on in our dividend growth investing class here over the past year has been Comcast, and they've been in a pretty nice uptrend here all of a sudden. I noticed that Charter Communication was one of the top 5 companies in the S&P 500 today, so another cable company there. So, you know, you don't get as much press out of those companies as you do the internet names. Nonetheless, they are helping support this advance, especially on a equal weighted system. And so great to see communication services back in the top 4. Remember, we like seeing that one doing well because they do have a lot of heft within the market, and it's kind of more of a risk-on mindset when you're talking about especially the internet-related names there. So they're back in the 4th place position for the first time since the middle of July. They had been number 4, you know, during that period of time, mid-June to mid-July, and then kind of fell out of favor there, but have now worked their way back into that top 4 position. At the bottom, we still have more of the defensive areas. My lowly consumer staples are back on the bottom, sadly, for me at least. For many of you, it probably doesn't matter, but I own a lot of consumer staples myself, and they have not been doing as well here lately as maybe I would prefer, but that's the way it goes. They'll be back at some point. Utilities also down there near the bottom, although they were able to get off the mat here this week and get into the number 10 position there at the moment. All right, let's go ahead and now pop back on over here to the main part of the platform, and let's do some 12 grid analysis. So let's go ahead and get started here with chart 5A. This will be our asset class 12 grid. And as we're looking at this, one thing I wanted to point out right away, because this is one of the bigger news stories of the day, Bitcoin erupted higher today. It was up 6%, as you can see, and we are at about 27,675 as we speak. But that was a move that was made on an intraday basis. We weren't necessarily assuming we were going to have a big move out of it. Now, you know, to be fair, when we're seeing the NASDAQ go up tremendously, those are days where you have a better opportunity for Bitcoin to also have an explosive day. So, you know, maybe the seeds were planted and maybe the ground was a little bit more fertile there with that type of a day on tap. But the real story behind Bitcoin today was that you know, we've seen Grayscale, one of the, I think it's a closed-end fund that is trying to convert into a Bitcoin spot ETF. And for the longest time, it looked like they were going to fail in that pursuit because the SEC was constantly denying their request to do that. Well, anyway, apparently the court system did side with Grayscale today and against the SEC. And so that kind of kicked off, you know, a bit of a push and a domino effect into those crypto-related assets here today. And it definitely helped not just Bitcoin, as you can see here, but it also helped Coinbase. We talked about Tesla already. Remember, Tesla is somewhat loosely connected with Bitcoin as well. And Tesla was the second best performer in the S&P 500 today. So this was an important story today, not one that, you know, we spend a ton of time talking about in these videos, as it's kind of mostly outside of the scope of the stock market. Nonetheless, it can have an impact. And today was one of those days where it was one of the key stories that was driving, you know, the risk appetite in the markets here today. So Bitcoin still trading below its falling 30-day moving average, but after just one fell swoop here, one big day to the upside, you know, if we can gather up some momentum, you might be seeing it back above its moving average soon enough. So very interesting to see that news emerge in the middle of the day today. But let's talk about the two bottom corners here, since that is oftentimes where we start our conversations with this 12 grid, because a lot of times those are the areas that will either make it easier for stocks to advance or harder when stocks advance. And you know, the quick and dirty on that is usually when these two corner charts on the bottom are rising, it makes it more challenging for stocks to go up. And so today, one thing that should be obvious when you're looking at these two bottom corners is the candles on both of the charts look really bad, right? That was a bad sell-off right there that I'm pointing at on TNX, which tracks the 10-year U.S. Treasury yield. Over here on the left-hand bottom corner, that's the US dollar, and that's a really aggressive candle right there. The only other candle on the entire 3 months of this chart that comes close to it is this really awkward one over here, and as we talked about at that time, that was more of like a glitch type of a situation more than anything. Today, as far as I know, this was a legitimate candle where we had a gap up to start the day, and for the remainder of the day, we continued to sell off the US dollar. So the US dollar was in such a aggressive up move prior to today that despite today's pretty solid sell-off, it remains with a strongly bullish posture. It's still above its rising 30-day moving average, but you will notice that the 10-year Treasury, that's no longer the case. It's still above its rising moving average, but it did lose its strongly bullish posture. We now have a weekly bearish posture on the 10-year Treasury. So naturally, when interest rates fall, as they did today, that's a day when in all likelihood bonds will be rising, and we certainly saw that. Notice that TLT had a pretty solid day, up over 1%. Foreign bonds didn't have as big of a move, but still an important day. They were up 0.23%. They're back above their moving average. It's still falling, but back above it. And then high yield bonds, wow, what a move there on HYG. They were up 0.63%, which is not a huge move, but again, we're talking about fixed income here, so we're not talking about the most volatile asset classes, but just take a look at that candle. That was a massive move right there out of the high yield bonds, and that's another way to kind of take the temperature of risk appetite. We saw Bitcoin exploding higher today. We saw high yield bonds exploding higher today. We saw stock prices exploding higher today. It was a joyous day for risk appetite out there, all things considered. You will notice, by the way, that foreign bonds and high yield bonds are back to strongly bullish postures, both of them above their falling 30-day moving averages here at the moment. Remember, sometimes high yield bonds can also get a boost when we have a strong day out of oil. And I would say that today did represent that. In fact, I kind of like the bounce we're getting out of oil here. We've had a strong advance out of oil for the last, let's call it, month and a half to 2 months. We then got this oversold cluster signal right where this red dot is. We then had kind of a reversion to the mean type of a move back towards that upward trending 30-day moving average, and now we're getting the bounce up and off of it. So I kind of like the way that that is setting up right now. And remember what we just looked at here a moment ago on the sector selector. Energy from a stock perspective is number one in the sectors, and it's being supported to a degree by this nice bounce that we're getting here out of oil. And I think that probably helped the high yield bond market a little bit there as well. Remember, a lot of the corporations that issued junk bonds in recent years have been in the oil patch. So when oil itself firms up, it has a slight added benefit to high yield bonds, all else being equal. Remember, oil was up today partly due to the fact that the US dollar was down. Another commodity that was up for the same reason probably was gold. And boy, this one is making me a lot happier. Remember, it was only a week and a half ago I was saying, I got to keep a close eye on this one. I got to be babysitting this one a little bit more because I still have that iron condor going on gold. And down here at the very lows of this move, it was threatening my strikes. And I said, I'm not giving up on it yet because we got all these oversold cluster signals, so I'm expecting some sort of a reversion to the mean type of a move. And the first couple of days was a bit of a whimper and a bit of a letdown. Now we're talking. These are the types of moves that you like to see. Gold was up 1% here today, and now I'm feeling really good about the iron condor, right? We are back right in the middle of the range once again. It just took a couple of days to get there. So gold has had an impressive bounce now that, started with a whimper, but now really got clicking after those oversold cluster signals. We're back above a falling 30-day moving average on gold. We do have a weekly bullish posture. Notice the light green background color as opposed to the dark green on oil. So it doesn't look as good of a chart as oil, but maybe it can turn into one, right? It doesn't take much if we can get that US dollar to roll over. Gold could very well end up going on a run there as well. Remember, when the US dollar is weak, as it was here today, having this kind of engulfing feel where it engulfed like really the 3 last days, that will lend support to a move in foreign assets as well. Now, oddly enough, the S&P 500 was still able to outperform the two main foreign areas, but I think it's because of how things developed in the United States. That is the answer there. And because the Magnificent Seven is a very international group, all of them have overseas sales and earnings and things like that, where you kind of had one of those rare days where it was a very international push, even though those companies happen to be headquartered in the United States. If it wasn't for the Magnificent Seven really outperforming here today with Apple and Microsoft and all those companies that do that business overseas, I think that the foreign stock markets probably would have outperformed the U.S. markets. But even having said that, it was still a very good day for the foreign markets, so I don't want to take that away from them. You'll see here that EFA, which tracks the developed foreign world, think Europe, Asia, parts of Asia, I should say, like Australia and Japan, it was up 1.24% today. And then the emerging markets, which of course would be China, India, Brazil, Mexico, Turkey, some of those areas, it was up 1.27%. So very strong days there for both of them, just not quite as strong as the S&P 500, which on a market cap weighted basis was really being led by those international companies within it. But obviously the foreign markets did outperform the Dow Jones Industrial Average if you wanted to compare it to a different index. Now you'll notice here the S&P 500 is back above its moving average, its 30-day moving average in this case, but we're still not there on the foreign markets. So EFA, you still have a little bit of an air pocket there, and it's probably even a little slimmer there on EEM. So both of them are closing the gap very, very quickly. Remember, it was only a week and a half ago. They were dramatically below their moving averages, even worse than the US. So it's doing a good job of kind of closing that gap. And in the case of EEM, here's another reminder of why sometimes it can be wise to be brave when everybody else is selling something, you're trying to play the game of scooping the babies out of the bathwater, and those oversold cluster signals are trying to help you with that conversation, right? Telling us that from a technical perspective, things are a bit overdone to the downside, and anybody who would have been buying, those foreign stocks on those days in the emerging markets, probably happy with that decision at this moment. Now, since we're butting our head up against underneath the falling 30-day moving average, there's no guarantee you're going to continue to be happy about that. So maybe you take some of your chips off the table here, but at least that being brave and going counter trend when you had the reason to do that with oversold cluster signals has worked out for you. And really, that story could be told across a lot of these charts, right? You look at not just EEM. If you would have bought that a week ago when it had the clusters, you're up nicely. Same thing here with preferred stocks. You had a couple of oversold cluster signals. It's up nicely since then. You had a couple of these oversold cluster signals on Bitcoin. It's up huge since then, but this one's a little different because you also had an oversold cluster signal up here that prior day before the gap down. So that one's a bit more mixed results, but still, had you been looking at that possibility of, that reversion to the mean type of a move, you might have caught part of that move there. You saw that with the foreign bond market here as well. Back-to-back oversold clusters were well higher than that a week later. Even with TLT, most of these recent oversold cluster signals were now trading above where those were on their closing prices on the day when they were plotted. And then again down below here with gold. Look at all those, we had 4 days in a row of oversold cluster signals, and we're well above all 4 of those days at this moment. So, not to send the message that the oversold clusters will always work, because that's certainly not true. But if you're looking for an excuse anyway to try to scoop up value, it doesn't hurt to also add the oversold clusters to your repertoire. And that's, of course, something that we talk about a lot in my dividend growth investing classes, including one of our candidates today. Today was a fairly rare day for us, because after 9 years of teaching dividend growth investing, we looked at a brand new company today. That's pretty rare, considering I teach that class nearly every single week for 9 years. It's rare to find a brand new company to kind of sink our teeth into, and that company happened to have an oversold cluster signal on its weekly candle chart. For those of you that are premium members, I won't spoil the surprise for you, but the recording to my DGI class is now posted to our calendar, so feel free to go check that out out if you didn't get a chance to attend that class live. All right, let's go ahead and have a chat now about the Sector 12 grid. So that will be chart 5C for those of you that are following along at home. And here things have improved as well, right? On one of the days last week, I remember that we had just one or two sectors that were close to getting to, that green condition. Energy was doing its best. I think it had a weekly bearish posture on one of those days, but it was touching that moving average. So I was saying that one is one that we could really see flip back to green very, very quickly. So no surprise that that one is back. The other one that I mentioned last week was healthcare because it was holding up reasonably well, and that one is also back to green. So no surprise that those two that I specifically pointed out last week are the ones that now have strongly bullish postures. Now remember, this is the market cap weighted version of it, so it can be slightly different than what we talked about earlier on the sector selector from a equal weighted perspective. This is going to kind of weight the bigger companies more heavily than the smaller companies within these sectors. And so it's more of a lean towards the mega caps that are in each of these sectors than anything. But those two areas are holding up reasonably well. So energy, healthcare, both are back to the strongly bullish intermediate posture. Both of them are now trading above their rising 30-day moving averages. The only other sector that's trading above its rising 30-day moving average is communications, and that just happened today. Notice the moving average color changed to green today. It must be by a very small margin that it's rising, because it, to my eye, after selling off in the last couple of days, it's kind of weird that the moving average was able to go up, but it's true. We've had 3 really strong days out of the communications, so that is accurate. And so I don't know how long it'll last, but for right now, at least you can kind of throw communications in there as attempting to kind of hold up alongside of energy and healthcare. So I like what I see out of there. And remember, with a market cap weighted approach like this particular 12 grid is, this is largely due to what we saw out of Alphabet and Meta here today. Both of them have very strong days and allowed communications to be up 2.22%. They were the second best performing sector today after discretionary, which was up 2.5%, and that is largely because of Tesla, right? Tesla and Amazon are part of the discretionary area, and Tesla was the second best performer in the entire S&P 500 today, so it's going to have a big impact on XLY on a day like today. But XLY still has the yellow moving average, so it's obviously still rolling over, and puts it in a slightly different conversation than what we're looking at there with communications. Technology looks a bit like discretionary. It also had an awesome day, 2% higher. Notice that. That's our big 3 up at the top. Those are our growth sectors. All 3 of them up over 2% today, or at least in the case of technology, exactly 2%, and then the other 2 clearly above 2% moves higher today and leading this entire market. All 3 of them are back above their 30-day moving averages, and communications is back above their rising 30-day moving average. That's what you want to see, right? Those are our stalwarts. That's who we need to be kind of the flag bearers and the torch carriers of this market. We need those areas with the biggest market caps to help this market along, and they're giving us their effort right now, so we appreciate that. In the middle rung here, you do have energy that still looks very strong. Remember when we were looking at that chart of oil here a moment ago, and I was saying I like the bounce off of the rising moving average. No surprise that XLE looks very similar, right? Because as oil prices go, generally speaking, the price of the oil stocks will go. And so those two are matching each other right now. Materials had a good day today. They were up 1.66%, but we do still have the strongly bearish posture there. We're still below that falling moving average. Another day or two to the upside, and that could change fairly quickly, so let's keep our eyes on that possibility. Down below, you still have staples and utilities also with strongly bearish postures, but you'll notice with both of those, they had oversold cluster signals here a week ago, and they're trying to make a move. It hasn't been aggressive yet, but they have seen a bit of a reversion there, so that concept is working out nicely for them, just like it worked out nicely with these oversold cluster signals for real estate, how it worked out nicely for the oversold cluster signals here on discretionary, how it worked out nicely for the oversold clusters here on technology. So if there's anything that you get from tonight's presentation, I hope it's that we should be paying attention to the oversold cluster signals, because they can be very nice signals to kind of start establishing position in stuff that you thought was unfairly punished. And whether that's ETFs or whether it's individual stocks that you find to be in a value position, it can be a useful approach towards the market. So anyway, real strong day across the board here. All 11 of these sectors were up. Energy was only up 0.27%, but because it had already done so well and is still in its uptrend, we'll forgive it for that here today. But as I mentioned, the real stars were up there at the top, 2% plus, with the three big kahuna sectors that we need to have support this market rally that we have. So isn't it amazing how things have changed here in just like a week or so? And now all of a sudden most of our sectors are back to that bullish posture once again. All right, now having said that, I do want to kind of concentrate my trade application example now out of this discretionary sector right here. So I had mentioned that the two big players in discretionary are Tesla and Amazon. And so today's trade application example will actually be on one of those two players. Let's go ahead and pull up chart 3A in this particular case, and pull up ticker symbol AMZN. This is Amazon here. And this one is not as wild of a company as Tesla, so perhaps that's why I feel a little bit more comfortable placing trades with it. But it still had a really nice day. I like what I see out of Amazon here. You can see that we closed near the high of the day. It was up 1.33%. It was an important day because we went from being below the falling 30-day moving average yesterday to now being above the rising 30-day moving average today. Just yesterday, we had our posture switch on the near-term line from bearish, when it was pink in the background color of the chart, to blue here yesterday. So it's one day away from when its posture changed, and then today was the fresh day in terms of having the moving average color change. You can also see that Amazon is outperforming the S&P 500 over the last 3 months. So notice that we have this dotted gold line down below that shows the pathway of the S&P 500 over the last 3 months, and ever since they reported their earnings right here, they have been a market beating security there as well. And that's not just a 3-month phenomenon. You'll notice that all of our performance labels up here at the top are green across the board, telling us that we have strength in multiple time periods. We've already had our earnings, so we don't have to worry about that coming up and ruining our trade anytime soon. You can also see that the green intermediate line on the market forecast is also rising now. That was not the case here a couple of weeks ago. That green line was falling, but there's been enough bullishness here, including today, that we have a slight twist higher there on that green line, in addition to the rising blue line here. And then last but not least, we do have a bit of a what's known as a bullish near-term divergence signal here as well. Notice that we have this blue line deep into the lower reversal zone here on August 17th. We have a follow-up, I'm sorry, I might have said a peak there. I should have said trough if I didn't say that. Let me correct myself here before we go forward. So it went down there with a low trough on the 17th. We had a follow-up trough on the blue line right here that you can clearly see is higher than that original one. So we saw an improvement on the underlying indicator. At the same time, when you look at the price action of those two exact moments on the chart, it would be this candle right here on the 17th, and then we had this candle right here on the 25th. And you can see that this candle was higher than this candle. So we had a slight selling off of price at a time when we had a slight improvement in the underlying indicator, and sometimes that's a giveaway, like a poker tell, that this particular security wants to get click into the upside once again. So what I opted to do in today's case, and remember I do all of these trade ideas before the stock market closes, and I send out those notifications via our private Telegram channel that we have for all of our premium members at Market Scholars, to give them some time to think about the trade as well. But what I did was I sold a bull put spread in this particular case. I sold the they were the October contracts, and it was the 125 put that I sold, and I think it was the 120 put that I bought. And I think I collected like $1.24 or $1.25, somewhere in that general vicinity, but it was a 30% return on risk. And for those of you that are newer to options trading, effectively what that means is I would like this stock to stay above basically $124, right? Because you factor in the credit that you receive up front there between now and basically the middle of October when those contracts expire. If that doesn't happen, so if Amazon for some reason just falls completely apart and starts to torpedo lower, remember the nice thing about selling bull put spreads is they are defined risk trades. That's the whole point of us having the bought 120 strike as part of it. It doesn't mean that you won't lose money on the trade. It just means that you can account for what your worst case scenario is if you leave the trade intact. And if the stock were to plunge to $100 for some strange reason, you wouldn't be losing more money down there than you would have when it started passing below 120. So that's kind of the nice thing about dealing with options contracts as opposed to just buying the stock outright. Now there's of course disadvantages as well, but that is one of the key advantages, is that it has defined risk. You know what your worst case scenario is. You can place your bet, and as long as you think that this stock will be either going up, going sideways, or even going down, but just not going down below 124, then you're in good shape with this particular idea. So figured we would try that one here with tonight's video on one of these Magnificent 7 companies. All right, so I appreciate you checking out tonight's video. We are at our hour. I hope you enjoyed the presentation. Quite the robust day in the stock market, back-to-back days, as a matter of fact. So things are looking a little bit rosier here all of a sudden. Remember that we had a big move out of Bitcoin here today as well, and then some nice moves out of commodities and foreign stocks. So an important day in the stock market as we head into trading here tomorrow morning. I'll see many of you in my swing trading class first thing in the morning. For the rest of you, I hope to see you on Thursday. Remember, if you want me to do another hour-long presentation, click like there for me on X/Twitter. As long as we're up and over 100, I'd be happy to do that for you. On the other hand, if you think that these are getting a little bit too lengthy for you, then choose not to click like. And if we're under 100 likes, then I'll just plan on keeping it nice and short at 15 minutes for you. So we'll let you guys decide there collectively. Whatever you do decide, I appreciate you checking out tonight's video. I'll wish you all the best of success with your trades and your investments. Goodbye for now.